Good morning, this is Bloomberg Daybreak Europe. Happy Friday, everyone. I'm Tom McKenzie. In London, these are the stories that set your agenda. Asian stocks stumble following a record-breaking day on Wall Street. The yen gains against the dollar after the BOJ keeps rates on hold. The US and Chinese presidents set to speak this afternoon with TikTok, tariffs and Nvidia on the agenda. Donald Trump, meanwhile, threatening to revoke the licenses of US TV stations that criticise him. Plus, the European Union looks to speed up its phasing out of Russian LNG after pressure from the US president. We are live at the EU finance ministers meeting in Copenhagen. So, as we look at the futures picture here in Europe, little subdued, of course, after the gains that came through yesterday, 0.8%. European futures essentially flat. Is there the next catalyst that these markets are looking for after that 25 basis point cut from the Federal Reserve? FTSE 100 futures here in the UK also looking for direction. S&P futures pointing higher by 0.1%. So looking to modestly build on that record day yesterday. And in terms of records, just framing it for you, because you had the S&P, the Nasdaq, the Russell 2000 and the Dow Jones all hitting fresh record highs. That's the first time we've seen that happen since November of 2021. So it was a historic day for the US markets. Let's flip the board and have a look cross-asset. We have continued, of course, to monitor moves across the Treasury curves. Relatively stable, though. 4.11 right now, the benchmark US 10-year. Move of just 1 basis point. The pound at 1.35. The BOE's Andrew Bailey saying that the path ahead for the BOE is still one of rate cuts. It's just a question of scale and timing. The pound a little softer in the session today, down 0.1%. Brent at $67 a barrel, down 0.2%. Can the Europeans get that conformity? Can they get unity in terms of the question of pulling themselves away completely from Russian oil? Gold currently up 0.4%, so the yellow metal getting a bid in the session today. Let's cross over to the Asian session, where, of course, the BOJ is in focus, certainly, and we've seen that strength for the yen and some softness for Japanese equities. A check on the Asian equity market right now. Reporter Winnie Su standing by. Winnie, what are you looking at?
Yeah, it is a very interesting session that we saw. Actually, lots of us were very nervous about it because there was a delay in kind of the timing of the decision. So we actually thought that there might be a hike. But when you look at the decision, yes, it was keeping the rates flat, which is what the markets have been expected. But there were two things that really stood out. One, that was the plan to sell the ETFs and the J-REITs. And yes, it marks that part of the policy normalization, but for the medium term, it actually adds more pressure to the Japanese stocks, and hence we're seeing the more downside in the Nikkei and also the topics in the afternoon. And another interesting part is that this time around we've got two dissenters, and that was the first time it has happened since Ueda took office. And it really goes to show that there is still some hawkish voices in the committee, and hence investors right now are expecting that the rate hike might actually come earlier than what the market has been expecting, and hence we see that the yen has been strengthening, and all eyes right now are on the pressure to come in the next few hours to see if we're going to see that hawkish tone from Governor Ueda, and if we're going to be able to expect a rate hike to come in October or in January. Now, take a look at overall Asia market. It looks kind of flat right now, but we are coming off this week with gains, and that's the third week of gains. That's the longest of such winning streak since May. So overall, the sentiment really remains intact. And in Hong Kong, we're seeing a bit of that bounce back since the tech share sell-off yesterday off that profit taking. But really now the focus is turning to the upcoming call between Trump and Xi, and attention is really on what's going to happen between their talks around TikTok and around trade tensions.
Winnie, thank you very much indeed. Yeah, looking ahead, of course, to that phone call between the two presidents, and before that, of course, the BOJ presser, as Winnie was saying. Bloomberg's Asia equities reporter Winnie Su with an update there on the Asian market action. And you can head to the T-Live blog on the terminal for more news and analysis on the Bank of Japan's decision and Governor Ueda's press conference later. Let's get back to the tech story right now. What a remarkable set of events that have taken place just in the last month or so when it comes to Intel. Shares in that company soaring after Nvidia agrees to invest $5 billion in the chip maker. That news crossed yesterday. Nvidia's CEO, Jensen Huang, says the deal presents an opportunity that could be worth $50 billion a year for both companies.
We thought it was going to be such an incredible investment. This is a big partnership, and we think it's going to be fantastic for Intel. It's going to be fantastic for us. And we're building revolutionary products that's going to address some $50 billion annual market. And so how could we, on the one hand, be excited about the products and how revolutionary they are, on the other hand, not be excited about the opportunities ahead? And so we're delighted to be a shareholder. We're delighted to have invested in Intel. And the return on that investment is going to be fantastic.
And investors cheered it yesterday, certainly with the biggest pop that we've seen in about 4 decades, almost 4 decades for Intel on the share price move, up more than 20% yesterday. Let's bring Bloomberg Intelligence Senior Analyst Rob Lee for reaction to this. Rob, what is your take on this deal? Does it make sense to you? Do you align with the view from Jensen Huang that this could be worth $50 billion a year? Who's set to gain from this investment ultimately?
OK, well, the clear winner obviously has to be Intel. Just look at the share price reaction, as you said. Interestingly, Nvidia's stock price was up only, I think, 3% on the back of this news. $5 billion to them is you know, they're printing money almost literally at the moment. It's not a big investment for them. I must say, in terms of the fundamentals, you know, regardless of what Jensen just said, and he's obviously a fantastic CEO, fantastic engineer, a fantastic salesman. He sold the story very well, but I think there's a lack of immediate near-term synergies for Intel, but for Nvidia. But most importantly, it throws a lifeline to Intel. We've seen the US government put about $5.7 billion into Intel in recent weeks. We've seen a $2 billion investment from SoftBank. So at least all of this will help stabilize the financial position of Intel in the near term. But the big question is on their growth outlook and, you know, what growth drivers are they going to tap into?
Yeah, indeed. And as politics seems to weave its way into every corner of US life right now, you have to question whether or not there was some political pressure maybe on Nvidia to make this deal as well, as you highlight the lack of at least immediate synergies. Jensen Huang, of course, was here in the UK just a day or so ago and making some investment news as well here, investing in the UK. What did you take away from some of those headlines around Nvidia's investments here in UK startups?
OK, well, again, that has to be a positive for the UK ecosystem. But again, $2 billion is not a large amount of money. Probably, obviously, means more to university spin-outs, etc., who should be benefiting from that money. But the biggest sort of question mark I have is, as you probably appreciate in the UK, I think the UK has a fantastic track record on innovation. You know, there's been some world-breaking, world-beating innovations over decades have come out of the UK. But I would argue that the UK's track record on commercialization is not as strong. And what we tend to see as a generalization is companies selling out too early to typically foreign investors. There's no problem with that. But what the UK really needs is to develop a more extensive, cohesive ecosystem on the tech front, and for companies and investors to take a longer-term time horizon to develop, you know, to help UK companies truly, fully benefit from their, you know, their innovations. What I'm trying to say is I think, you know, companies that are selling out too early. So we need to see a change in their approach to that. So just as a quick aside, for example, a lot of the original patents on OLEDs came out of the UK from a company called Cambridge Display Technology. That is a multi-billion-dollar industry. Where is the UK positioned in it at the moment? It's dominated by Korean and Japanese and Chinese companies. So $2 billion from Nvidia definitely helps, but we want to see a change in mindset from UK companies, UK investors, to try and fully capitalise on the huge innovation that comes out of UK universities, UK engineers and UK scientists.
Yeah, I didn't know that about OLED and the origins in the UK. But you're right, growth and scale and having scalable global businesses in the UK is a dynamic, of course, that needs to be changed. Rob Lee, thank you very much indeed with the context around some of those investments from Nvidia here in the UK. Now, it's a record-breaking day on the markets for not one, but 4 key US equity benchmarks, as I mentioned. Let's get the details from Bloomberg's Valerie Teitel. Val, what does this signal? I mean, is this rational exuberance right now across these equity markets stateside?
Look, there's a lot of positivity across risk assets yesterday. I think the reevaluation was that the Fed was cutting because they can, not because they have to. And that's positive for domestic growth in the U.S. We saw all 4 major U.S. indexes closing at record highs yesterday off the back of this. The S&P 500, the tech-heavy NASDAQ, the domestically oriented small-cap Russell 2000 index, and the blue-chip Dow Jones, all closing at record highs. Something we've not seen since 2021. And, Tom, something that's only happened 25 times in the last decade, in the last century alone. Now, a lot of the outperformance was actually focused in the small caps. You flip on, just take a look at the Russell 2000 yesterday, up 2.5%. Now, this is telling me that the market read-through of the Fed is that they are protecting growth over fighting inflation, and that is a positive story for these domestically oriented small cap stocks, hence that outperformance in small caps. We also need to note that because the Fed has drawn our attention to the labor market, the hotly watched weekly jobless claims came in quite strong yesterday, and this led to some substantial weakness in the Treasury market across the curve. We saw 2-year yields jump 6 basis points after this data was released, now trading substantially higher in yield from where we were at that Fed decision. Now, there's a lot of discrepancies to give you about this weekly jobless claims figures. It did drop the most in 4 years on a week-on-week basis, but there has been a lot of nuance when it comes to these numbers. The previous week was driven higher by fraud in Texas, and there are some claims that the data yesterday was driven lower by a technical glitch from North Carolina. But the market is seeing this as a positive view on the labor market, and perhaps this chorus that firings are being led in the U.S. labor market is going to be put to bed for now.
OK, maybe there is a little bit more stability in this US labour market than many, or at least some, had fears. We continue, of course, to monitor the data on that front to get more clarity. Bloomberg's Valerie Teitel breaking it down for us. Val, thank you. Now, US President Donald Trump could ease trade tensions with his Chinese counterpart Xi Jinping today while determining the fate of TikTok. A framework agreement would shift control of the social media, its apps, US operations from its Chinese parent, ByteDance, to a consortium of American investors. The two presidents due to speak at 2 p.m. UK time after more than a year of negotiations. Bloomberg's senior Chinese economy and government reporter James Mager joins us now. James, the first conversation then since June between these two leaders. What are you and the team going to be watching for?
Good morning, Tom. I think, the breadth of what could possibly come out of these discussions just sort of shows how deep the ructions or the differences are between the US and China. Because, I mean, it goes from TikTok to soybeans. You've got Nvidia chips, you've got rare earth metals, you've got tariffs. I mean, any of those would be an important bilateral discussion, maybe excluding TikTok for the economy. But, the possibility is that you could come out with a deal where China will buy billions of dollars worth of US soybeans as the US goes into the marketing season. You've got a possibility of more movement on rare earth metals, because though China has been slowly ramping up exports of those, companies around the world in Europe and America are still complaining that they're not able to get as many magnets as quickly as they need, and it is still affecting businesses. You've got the discussions about TikTok as well, which is an important social media company which millions of people in America and other countries do use. So that would also be important for both ByteDance's position and also the companies that are meant to be buying a stake in that business in the US. So it really does show how many different issues there are between the two countries and how really tense a lot of those questions are. I mean, really, is there going to be a breakthrough on high bandwidth memory chips? Is there a breakthrough on export controls from either side? I mean, it seems very unlikely. But these are all of the different things that we're looking for some kind of movement on from these talks tonight.
OK, James Mager, thank you very much indeed for what to think about as we look ahead to those 2 p.m. UK time conversations between the US president, of course, and his Chinese counterpart. James, thank you for that. Here's what else to think about today, 7 a.m. UK time. Before we get to that phone call, UK retail sales, so another touch on the health of the UK consumer at a time, of course, when prices and inflation remains a challenge for households, of course, as well as the BOE. And at 2 p.m. UK time, it is that phone call between the two presidents, James Mager outlining what to focus in on. There's a lot that could be unpacked during that call. As he said, everything from soybeans to TikTok. And at 7:30 p.m. UK time, we're going to be hearing from the Fed's daily as well. So that coming after, of course, the first cut of the year by the Fed, 25 basis points. We'll see what her views are on the dot plots, forecasting another 2 cuts by the end of this year. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB. Go on the terminal right now. The focus is on that BOJ decision. The press conference is coming up. They kept rates on hold as expected. But what was not expected was a decision around unfolding some of their ETF holdings. Coming up, after Jimmy Kimmel's show is pulled indefinitely, Trump threatens broadcast networks that criticize him. What is happening with free speech in the US? That's coming up. Plus, as President Trump and Prime Minister Keir Starmer sign a £250 billion tech partnership, has Starmer's campaign of Flattery secured the special relationship? More on that later in the show. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, President Donald Trump says US broadcast networks should face scrutiny over their licenses if they're too critical of him.
I read someplace that the networks were 97% against me. I get 97% negative, and yet I won it easily. I won all 7 swing states, popular, I won everything. And if they're 97% against, they give me only bad publicity or press. I mean, they're getting a license. I would think maybe their license should be taken away.
Well, the president's comments came as he defended ABC's decision to suspend Jimmy Kimmel's show indefinitely. For more, let's bring in Bloomberg's news desk editor, Balazs Pence. Balazs, is this the latest sign of a threat that Trump is making to the media? This is we've had Trump administration attacks on law firms, on universities, pressure campaigns there, on the Federal Reserve, of course, most notably, and now it seems on the media. And we have a $15 billion lawsuit being pursued against the New York Times, and now, of course, this latest episode around Jimmy Kimmel. What does it tell us about the Trump administration's focus on the media landscape and free speech and free reporting?
Could be hard to parse the president's words, what's policy and what's more atmospherics, but these comments certainly do seem to go further than previously. Look, in the background, it's a fact that presidents have had sometimes adversarial relationships with the press since time immemorial, and Trump himself, ever since he's been a public figure, which counts decades now, has often been combative with the media. But what this really highlights is that how, since his return to the White House, the president has been a lot more deliberate and some might say a lot more effective in finding the levers that he can pull to get the media to acquiesce to his wishes, to his preferences. And part of that is, in the background, is, of course, the FCC. And what we've seen in a lot of these situations is that this involved media companies that have had mergers in front of the FCC waiting for approval. And that's something that the administration has been able to sort of lean on as it tries to manage its relationship with the media. So it does seem like there's a departure from what we've seen before. Just how far it will go, we're not quite sure yet.
Yeah, question marks about free speech, question marks as well about following the dollars when it comes to this story. Bloomberg's news desk editor, Balazs Pence, thank you very much Indeed, with an update. Coming up, the latest sanctions proposal against Russia looms over the meeting of European finance ministers today. We are live from Copenhagen. That is next. And this is Bloomberg. The European Union is looking to phase out its use of Russian LNG. Yes, it still is using Russian LNG more quickly after a push by President Trump. EU finance ministers currently holding an informal meeting in Copenhagen with new sanctions on Moscow in focus. The Austrian finance minister telling Bloomberg it's important to keep up the pressure on Vladimir Putin.
We should get tough on Russia, yes, but we have to stay into the legal framework as well. And we'll try to sort out in a technical way what is possible, what is not possible. But still, it's clear we have to help Ukraine and be tough on Russia. And the technical details have to be discussed.
So something like borrowing against the assets, for example, do you see that as a reasonable path?
One possible thing, yes.
And then another thing that the Trump administration has proposed, which I think puts a pretty interesting dilemma before the Europeans, is putting tariffs of 50 to 100% on China and India for buying Russian crude oil and Russian gas. Is this something that the Europeans take seriously? How do you think about that sort of proposal from the Trump administration?
Well, I think the question of tariffs, the European Union will decide. So that's the point where the Europeans have to decide and not discuss only proposals coming from the US. I think, of course, the goal should be to get independent from Russian oil and gas as soon as possible, and I think the Commission has proposals into this directions. I'm not that sure whether tariffs are the most important solution from an Austrian point of view. I think enormous investment into renewables is the most important part of getting into that, because then we don't need any oil or gas from Russia, and then we get independent.
The Austrian finance minister speaking to Bloomberg's Oliver Cook, who joins us now from Copenhagen. Ollie, President Trump has a point, doesn't he, when he says, look, you're putting pressure on me to put pressure on Russia whilst you're still consuming LNG, oil
Absolutely.
and diesel that ultimately originates in Russia. What is the proposal? Are they going to move on this?
Yeah, well, listen, the reporting that we have overnight is that they are going to move on this, and they're going to move at a slightly faster pace than they had originally intended. So remember, the proposal from the European Commission was to phase out Russian fossil fuels within the European Union by the end of 2027. We understand that that timeline has now shifted earlier by a year, i.e. it would be by the end of next year. There's some questions about whether or not that will still be fast enough for Donald Trump. But as you point out, Tom, and this is a point I think that bears mentioning, because a lot of that gas pipeline has been cut off into the European Union. There's still exceptions for Hungary and Slovakia. But in the last year, there have been huge volumes that have been delivered in the form of LNG, which means that last year, even 2.5 years into this war with Ukraine, about 20% of all of the gas that was consumed within Europe was still coming from Russia. That is a dilemma that the Trump administration was not pleased with. They can understand why they're unhappy with that, and they're pressing it to the Europeans. But a lot of that LNG is still coming into Europe, and that is what they basically are going to try to choke out over the next year. That is what I'll be talking to about a number of different ministers here. We'll also be putting to them about whether or not this proposal about putting tariffs and sanctions on the Chinese and the Indians is a serious thing for the Europeans. And I should say one final point, Russian assets. The Europeans are now open to sort of touching those Russian assets, not just the proceeds. And that's what we're going to get from the finance ministers here in Copenhagen.
Great job, Ollie Crook. Thank you very much indeed. A busy day for Ollie and the team on the ground for us in Copenhagen. We're going to return to Ollie later in the show when he'll be joined by Paschal, Donohoe, the Eurogroup president and the Irish finance minister. Coming up, a sigh of relief. You can almost hear it for UK Prime Minister Keir Starmer, with a deal signed and smiles all round from the US President's second state visits. More on that next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. Happy Friday. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks stumble, dragged lower by a stronger yen, and the Bank of Japan's decision to begin selling its massive ETF holdings. The US and Chinese presidents set to speak this afternoon with TikTok, tariffs and Nvidia on the agenda. Donald Trump also threatens to revoke the licenses of US TV stations that criticize him. Plus, the European Union looks to speed up its phasing out of Russian LNG after pressure from the US president. We are live at the EU finance ministers meeting in Copenhagen. Let's check in on the markets then after a head-spinning day across US equities yesterday. Every single major index from the Russell 2000 through the Nasdaq, the S&P, the Dow Jones, all hitting fresh record highs. You have not seen that since November of 2021. So remarkable gains that came through across the board yesterday on US stocks. Will that momentum continue? Futures pointing a little softer today, a bit of a breather after that run-up on the back of the 25 basis point cut from the Fed. Europe was a decent day as well yesterday. Today, pointing low by 0.2%. FTSE 100 futures are currently flat. S&P E-minis, as I mentioned, unchanged. Nasdaq 100 futures as well after the rally of yesterday, currently looking for direction. Let's flip the board and look cross-asset. Yields up 1 basis point on the benchmark US 10-year. Largely stable across the Treasury curve today, closing in on 4.12 on the 10-year. 135 on the pound as the BOE's Andrew Bailey says Bank of England is not yet done on rate cuts. It's just a question of timing. Brent at $62, about down 0.2% on oil, and gold getting a bit of a lift, up 0.3% at $3,656 per troy ounce. So the Bank of England Governor Andrew Bailey, as I mentioned, indicating that more rate cuts are to come, saying rising inflation and an easing labour market are still risks. The MPC voted 7-2 to keep rates on hold at 4%. Yesterday, markets have all but ruled out a cut at the next meeting in November. The central bank also stepped down the pace of quantitative tightening following concerns over bond market volatility.
We take into account all market conditions. So any effect that our sales have on market conditions and therefore on interest rates going out along the sort of the whole maturity spectrum of interest rates, we will take into account when we set bank rates. So there would be an offset there, in other words.
And, of course, that Bank of England decision and the comments, of course, from Andrew Bailey coming on the same day that we got President Trump wrapping up his state visit to the UK. Golden carriages, military splendour and an opulent banquet. The UK's royal gambit paid off this week as President Donald Trump and Prime Minister Keir Starmer concluded an historic state visit by hailing the transatlantic relationship and, at least publicly, smoothing over their policy differences. It was exactly the kind of response UK officials had been hoping for as Starmer hailed a, quote, record figure of £250 billion in bilateral tech investments.
We're committed to ensuring that the UK has a secure and reliable supply of the best AI hardware and software on Earth. And we supply that, and we'll make sure we supply it in quantity to the UK. And we also are joining forces on quantum computing and nuclear power, a natural partnership for close allies.
This tech partnership has the power to change lives. It's our chance to ensure that technologies like AI, quantum, and others amplify human potential, solve problems, cure diseases, make us richer and freer.
Let's bring in Rosa Prince right now, Bloomberg opinion columnist on UK politics. And Rosa, I'm sure you were watching all of this very closely. I can't remember a presidential visit where there has been such a singular focus on technology. What does that tell us about the relationship between the US and UK right now?
Yes, I think you're absolutely right. So the British economy has not been doing all that well lately. Keir Starmer is very much pushing for some growth. And this is an area where I think they see some great potential. There was a huge amount of investment announced over the last couple of days, and they see that as one way that perhaps the sluggish economy can get a bit of a kickstart. So very welcome those deals that were signed over the last few days.
And Rosa, look, the deep concern clearly amongst UK officials was that the press conference would cause some controversy, that Starmer would be tripped up, that President Trump would say something that would go down as something of a bombshell. We didn't have any of that. So on that front and across the 2 days, no missteps from the royal family. It was smooth. It worked. It was a victory on that level. But on key policy issues around Ukraine and Gaza, clearly there's a sense that President Trump has not moved closer to the UK position. How does that evolve, do you think, that part of the story in the days ahead?
Yeah, you're right. I mean, it was very polite. It was very, very warm between the two men. But when you step back and think about what of substance, what tangible has been achieved, particularly on the foreign policy front, not very much. I mean, I think that down the street at this point, the president can be so unpredictable. I think they'd be quite happy with the way that things played out on Gaza. The prime minister and he kind of agreed to disagree. He didn't get a ticking off about Britain's plans to recognise the state of Palestine, which I think they will consider a good thing. He even got a kind of pat on the shoulder, Keir Starmer, from Donald Trump when he talked about how much he really dislikes Hamas and how strongly he feels about the situation there on that front. So I think they will feel that they got away with that one. On Russia and Ukraine, there were kind of some warm words from Donald Trump in terms of getting tougher with Putin, but it really seemed to be just that. There wasn't anything tangible. He didn't put a deadline in there. So I think it's back to working behind the scenes, back to officials meeting officials and hoping to push the British agenda on that front, albeit in the context of quite a warm and fuzzy feeling coming off this very successful state visit.
Rosa, what is your assessment of just how deep the relationship around technology is now becoming between the US and UK? Clearly, we have that historical relationship when it comes to our security services and our military. So maybe it's inevitable, but the French are taking a very different approach, for example, when it comes to sovereign technology. Is there a risk for the UK at some point down the line?
Yeah, I mean, there was some chatter before the summit that Britain would have to give way in some areas on tech, perhaps in fields it didn't want to. There's the digital services tax we have here. The government is looking into the issue of copyright and how that relates to AI. Also, the Online Safety Act. These are all things that there had been rumours would be on the table during the discussions. Now, we're told afterwards that hasn't happened. We do have a budget coming down the track, so perhaps some of these things might be revisited in the budget. And in terms of whether Britain is independent enough for the UK, well, from the US rather, I think that is a concern. It was something that was raised by Nick Clegg, the former Deputy Prime Minister, who you'll remember worked for Meta for a long time. And he kind of implied that Britain had become subservient to the US, that we were no longer independent in the tech sphere, and that was a problem, that millions of Brits were giving over their data to American companies without much sort of control over that. I think the response from other people would be, well, what's the alternative? There are so few tech superpowers that sort of aligning with our very, very close ally, the US, makes sense of this. But France is going it alone, as you say. They sort of have a habit of doing that. We've seen that in defence. So it'll be interesting to see how it plays out for the two different approaches.
Rosa Prince, Bloomberg opinion columnist on UK politics. Thank you very much indeed with those views on the back of that state visit, of course, and the investments around technology. Now, some other stories making the news this Friday. The US has vetoed a UN Security Council resolution demanding an immediate ceasefire in Gaza that was backed by all other members. This is the 6th time Washington has vetoed a Gaza resolution since 2023 and underlines American and Israeli isolation over the war. The US said the resolution failed to adequately condemn Hamas. French unions led widespread anti-austerity protests on Thursday against spending cuts proposed in July. This adds pressure on the new Prime Minister as he struggles to find allies to piece together a budget. Sébastien Lecornu is planning to consult with unions in the coming days, but he has little financial margin to appease them if he is to tackle what has become the widest budget deficit in the euro area. The renewed sell-off in French assets is also piling on pressure and pushing borrowing costs higher, with the yield spread with Germany widening once again. And Fedex has warned that it will take a $1 billion hit to profit because of trade volatility caused by US policy on tariffs. Most of that is down to changes to the de minimis rule, which exempted low-value goods from import taxes and has resulted in fewer shipments from China to the US. And shares in cybersecurity firm Netskope soared on its debut in New York following an IPO that raised $908 million. The listing values Netskope at $8.5 billion, with its biggest backer, Lightspeed, set to see a more than 5 times return on its investment. And last week, Elon Musk briefly lost the title of the world's richest person to Oracle co-founder Larry Ellison. Known for its database software, the company has recently found success in the red-hot cloud computing market, competing against the likes of Amazon, Microsoft and Alphabet. Bloomberg Originals explains how the legacy tech giant became an AI force.
True to its name, only Oracle seemed to see this coming.
Oracle is having its biggest jump since 1992.
What a blowout quarter for the software company.
Maybe the stock of the year.
And then, just days later,
TikTok's US operations are set to be acquired by a consortium including Oracle.
Oracle shares spike after it's named as part of the consortium.
What was going on? This was an old-school enterprise tech firm, tickling investors in places only a flashy startup normally reaches.
Because Oracle basically said that they have almost $500 billion of contracts to be earned in the next few years. And that was a shocker.
Everyone was modeling maybe, $150 billion.
It blew away analyst expectations.
Now Oracle's deeply connected to one of the hottest social media properties on the planet, and behind one of the most ambitious infrastructure projects on the planet.
Oracle had been written off as a kind of IBM-like company. This is an incredible comeback story.
Well, subscribers can watch that documentary right now on the Bloomberg terminal, of course, and Bloomberg.com, and on the Bloomberg Originals YouTube channel tomorrow. Coming up, we will return to the EU finance ministers meeting in Copenhagen, where we're going to be joined by the Irish finance minister and the president of the Eurogroup, Paschal Donohoe. Stay with us for that conversation coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's return to the EU finance ministers meeting, where the bloc is planning to accelerate the phase-out of Russian LNG. Bloomberg's Oliver Crook, of course, is on the ground for us in Copenhagen with a guest. Ollie.
Yeah, that's right, Tom. I mean, many things to discuss here. A number of them are sort of inspired by the Trump administration. Some of the proposals, should we say, suggestions that they've made to some of the Europeans on how to exert additional pressure on Russia. And I'm very pleased to be joined by Paschal Donohoe right now, who is the Irish finance minister and, of course, the president of the Eurogroup, who can talk about all of these issues. Let's deal with some of these 3 proposals that have been put forward by the Trump administration. Let's deal with the first one, which is a great displeasure at the fact that even last year, 20% or thereabouts of the gas that was being bought in Europe was coming from Russia, largely in the form of LNG. Now, can we talk about the timeline of actually banning that? We've heard now that the Commission is pushing a proposal to ban it by the end of next year. Will there be no Russian gas in Europe by 2027, the first day of the year?
So I would just make the opening point that the European Union and Europe has been at the forefront of providing economic support and economic assistance to the people of Ukraine as they deal with the awful effects of the war that has been inflicted upon them. And also that Europe has made huge efforts and been very successful in reducing our reliance on Russian energy and Russian gas. So in recent years, huge efforts have been made to increase our energy independence. In relation to your question, the Commission have indicated that they want to bring forward the proposal to further accelerate the reduced reliance we would have on Russian energy. And I know that efforts will be made to do that. We're awaiting the Commission proposal. I don't want to comment on a timeline for now because further consideration needs to happen. But we're going to continue with our efforts that have been successful to reduce that reliance.
And then another sort of point that the Trump administration made, and it's been an active debate in Europe for a long time, is what to do with the immobilized Russian assets. We've already, in Europe, there's been a decision to take the profits from that. There's now a more active discussion. We understand the Germans are now on board with finding a way to monetize the underlying assets themselves. Do you see this as something that could happen in the next couple of months? Would it be borrowing against the assets? What kind of structures are being discussed?
So again, let's just recognise the progress that has been made. If I look at the work that has happened in relation to the loans that were generated from the immobilised assets in the past, This has played a really important role in providing additional support to the Ukrainian economy. We now have what I would describe as very important discussions underway regarding can this be taken a stage further. I know and believe the discussions that are happening within the G7 are very positive, and the key issues that we've emphasised, particularly from the perspective of the euro area, is the need to recognise the international role of the euro and its stability, and also recognising the rule of law. And I believe the discussions that are underway at the moment are inside those parameters, recognise that. And as it was in your earlier question regarding Russian energy, we are sparing no energy and sparing no effort in trying to find further ways in which we can support Ukraine at this critical time, and that Europe can continue to play a lead role with regards to it.
And to get to the sort of final proposal that we heard from the Trump administration over the last week, this is the question of secondary sanctions. He basically said the United States is willing to do 50%, 100% tariffs on China and India for the continued purchase of Russian oil and gas, but the EU has to go first. That, it seems to me, is a bit of a rich proposal for the EU to consider, but is there an inspiration somewhere in there to potentially target Chinese and Indian firms? Is that something the Europeans would look to do?
Look, we will continue to look at steps that we can take that will ensure that the Russian economy is dealing with the costs that have been created on the people of Ukraine. We have already put in place so many different measures to deal with many of these issues, and we will continue to work with international partners with regard to this. But I would make the broad point that from a European Union point of view, we continue to want to find additional ways in which we can do trade in a rules-based way with other international partners. And as you know, we have much engagement underway with regard to that. But supporting the Ukrainian economy, Europe continuing to play a critical role with regard to that, is at the foremost of our minds. And on all the different issues you've touched upon, I know a lot of work is now underway, building on the progress that we've made in recent years.
And on the issue also of trade and trade sanctions, there's been a proposal put forward to reduce the trade or to sort of hamper with Israel some of the carve-outs that they've got as a preferred trading partner. Do you think that there's a qualified majority within Europe to move on that, or do you think that that is basically not yet determined?
So just with regard to that question, just commenting on it as Minister for Finance for Ireland, I would just say that we are very supportive of efforts that are going to be made at a European Union level to respond back to the awful suffering that is now underway in the people in Gaza. Ireland has long called for the European Union to play a lead role and a bigger role with regard to that. And we ourselves are now studying the proposals that the Commission are working on with regard to that. So from a national perspective, our stance is clear, but I do respect and understand that other governments will be assessing their response to it. We certainly believe that further measures need to be taken to emphasise that the suffering the people of Gaza are now facing is too much, that steps have been taken, but more needs to be done.
And I'd like to get your appraisal as well, some of the sort of political upheaval and paralysis we've seen in France, and sort of your perspective on how that plays out on the economy more broadly in Europe, how it will play out in basically so the sense that within Europe there's not an ability to sort of get things done and to sort of forward, very ambitious agendas, say with the Draghi report. How does sort of France, you think, play into that, and what are your fears that it could have in terms of spillover effects on the European economy?
Well, Europe still gets a lot done, and so far in our interview we've covered off progress that has been made in many different areas, albeit with regard to the extraordinary steps we've had to take to support the people of Ukraine and their security, which is our security. In relation to the French situation and what is happening there, it's not for me to really comment in any way on the detail of what is happening inside the Parliament of France and within their government. But I continue to be reassured by the efforts that the French government are making to put in place a credible budget for next year, and the efforts that they have made to ensure that the budget targets for 2025 are met. And more broadly, from a euro area perspective, if you look at where we stand in the first half of this year, we still have a record number of people at work. Disinflation is well underway, and our economies within the euro area, despite everything, we're seeing many of them either be stable or grow. So we'll continue to support and monitor what is happening within the French economy and within their politics. But I, at first hand, can see the efforts that Minister Lombard is making with regard to this.
Well, Minister, thank you so much for your time. Greatly appreciated. That is Paschal Donohoe, I should say, the president of the Eurogroup, and also the Irish finance minister, sort of setting the agenda for what we're going to be getting from the finance ministers here convened in Copenhagen.
Indeed, Oliver Crook on the ground for us in Copenhagen, alongside, of course, Paschal Donohoe, Irish finance minister and Eurogroup president. There's a lot more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So, let's get you back to what's been happening in terms of the US equity story yesterday. This is the first time that we've seen 4 of the major indexes reaching record highs on the same day. November 2021, you have to take yourself all the way back to then. We had the Russell 2000, that 25 basis point cut from the Fed really lighting a fire under the small caps. Is that a momentum trade that's going to continue? Nasdaq 100, the Dow Jones, the S&P, all notching those fresh record highs yesterday. Today, futures story tells a slightly more modest picture, but given the gains, of course, and in terms of the global stock rally, that is something to bear in mind as well. What a day it was for US equities yesterday. Let's flip the board and have a look at one particular name that stood out with an idiosyncratic story. Intel, what a reversal of fortunes. Nvidia investing $5 billion. And what that's done to the stake of the government that invested, taken about a 10% stake, and the value of their stake is now about $13 billion. They've seen some real upside, the US government and the Treasury, on the back of that decision a little under a month ago to take that stake in Intel. Then you had the decision, of course, from Nvidia yesterday, and the stock soared the biggest jump that we've seen in about 4 decades, up around 22% by the end of the close for Intel yesterday. Let's flip the board and have a look at the central bank story of the day, which is the BOJ. And really the focus was on the decision to start pairing some of their ETF holdings. They started doing this in 2020, getting exposure to the equity markets of Japan. The biggest holders, in fact, across ETFs of Japanese equities. They will start unwinding some of that. That was the announcement. 37.2 trillion yen, which is about $250 billion. That is a value, the book value of the BOJ's ETF holdings, the book value. The real value right now is a lot higher than that. Bloomberg users, of course, can get these terminals and all this data on the terminal. Throughout the show, of course, go to GTV Go on the Bloomberg terminal. Plenty more interviews coming up from the EU finance ministers meeting in Copenhagen on the opening trade. Plus, Alistair King, the Lord Mayor of London, is on the pulse at 9:30 a.m. UK time. The opening trade, though, is up next. Stay tuned for that. This is Bloomberg.